A warm welcome to everyone. My name is Andrew Fake and I'm from Minds and Money. Today's pitch battle forms part of our May Roadshow series, which today runs in the EMEA time zone from 8 AM to 8 PM London time. Next week, the show runs on the 18th of May at 8 AM to 8 PM Toronto, New York time. For those who are the investors and miners, you've got access to our meeting planner where we invite you to go and have your one-to-one meetings between investors and mining corporates, and also invite you to go and watch our content that is running throughout both of those days. But without further ado, I'd like to introduce you to today's pitch battle. And as always, to Jochen Steiger, who has hosted many of our pitch battles. Jochen Steiger is chief editor and founder of Commodity TV. So without further ado, I'd like to hand you over to Jochen.
Andrew, thank you very much, and a very warm welcome also from my side today here from Austria, as I have a little bit of a vacation, and very happy to be allowed to MC this mining pitch battle again. Yeah, first of all, let me introduce to you our companies, and this is also the order what we are running before I give you some further details. We have, first of all, David Stein, the CEO of Kuya Silver. Then we have Kevin Bullock, the CEO of Anaconda Mining. Then the third is Cole Evans, the CEO of Enduro Metals. And last but not least, Scott Eldridge, the CEO of Canagold Resources. Before I come to the judges, I just want to tell you this is a pitch battle, of course. So we will vote at the end with our judges, and unfortunately, $1 million virtual dollars, which can be maximum split in half to vote for the companies at the end. And the voting will do our judges, which form the critical question mess today to the companies. First, we have Vincenzo Zinni from Stelvio Capital. Then we have Angelos, Damaskos, the CEO of Sector Investment Managers. Then we have Loni, Saul, the director of Kings Road Capital. And we have Simon Popple, the managing director of Brookville Capital. And last but not least, my dear friend from Zug in Switzerland, Professor Dr. Torsten Dennin, the CIO of Asset Management Switzerland. Yeah, very warm welcome to all of you. Thanks for taking the time. Also for the participants, I'm pretty sure you get a lot of good content here, good company stories, and really detailed information, as I hope that our judges will roast a little bit the CEOs. And I would suggest that we get started with David Stein, the CEO of Kuya Silver, and everybody has 3 minutes to talk, afterwards followed by 8 minutes with our judges. And I have my lovely butler here, which will tell you when the time is off. So I would suggest, David, if you are ready, the floor is yours.
Okay, thanks, Jochen.
David? Yes.
Good day, everyone. I'm David Stein, founder, president, and CEO of Kuya Silver. I've spent my career analyzing mining stocks on the buy side and sell side, and deep down, I'm an investor just like you. I'm heavily invested in Kuya Silver today, and I'm going to explain to you why I expect the stock to be a 10-bagger over the coming years. When you're analyzing mining stock, there's two major aspects: the quantitative, the numbers, or the qualitative, the big picture story. I'm going to focus today on the big picture. And if I convince you, I encourage you to dig into the numbers yourself and contact us so we can help you. All right, so we went by our disclosures. There's only 2 slides to the pitch. This is the first one. So firstly, the market loves growing silver miners. And even with a small amount of production, companies such as Aya and GoGold have managed to achieve meaningful valuations. They are less risky than a pure exploration stock, as their cash flows help fund their growth instead of constantly having to go to the market. And they boast compelling growth stories through their successful exploration. Kuya is an earlier version of these companies. Up until a few years ago, our flagship Bethania silver mine was producing silver at 15 ounces per ton head grade, and we're working on an expansion program to put it back into production next year. Bethania is strikingly similar to Aya's Zgounder mine, but I would say 12 to 18 months earlier. Kuya owns its assets 100%, and we even have a second earlier stage project in Canada that gets little to no value right now. Forward, please. Another example from the gold sector is K92. Even in a very risky jurisdiction, go back, they've followed the same model in growing production through cash flow and have been hugely successful doing it. if Kuya can grow into the valuation of Aya and GoGold by putting Bethania into production and delivering the resource growth through aggressive exploration, even assuming some dilution, we're talking about 6 to 6.5x from today. Now, how do we go from 6x to 10x? The answer is silver. Forward. Next slide. Next slide. There, thank you. There are lots of reasons to be bullish on silver. And if you're bullish, you want to own silver miners for the best upside potential. The whole primary silver mining sector, miners who get more than 50% of the revenue from silver, is about 10 billion. And that includes First Majestic, which is diversifying into gold. Generalist investors understand production and cash flow. They don't want to figure out what drill intersections mean. So when silver, forward please, goes from 27 to 35 to $40 and beyond, there will be a rush of capital into the sector. And that is how Kuya will go from 6x to 10x. Thank you. Can go one more slide. That's it.
Wow, that was pretty fast. Thank you very much. Great. And please get rid of the screen sharing. Thank you very much. And now our judges. So who has the first question? Just raise your hand. Whoops, that's Torsten.
Yeah, quick question. In terms of production, can you tell me how much, how fast?
So if you take our permit, we're permitted to build a 350 ton per day plant. If you multiply that by 15 ounces per ton and you take, which is our historical grade, and you take a reasonable recovery, you'll get about just under 2 million ounces a year of pure silver production, and more than that if you look at the byproducts. You know, in terms of startup, we're looking at Q1 2022 right now.
Mm-hmm. Then Angelos.
And I thank you, David, for the presentation. We know the positioning for silver is quite a compelling proposition for investors who want to achieve a pure positioning for silver companies. There aren't that many around. The key is always in the restart of operations. Obviously, it's a past-producing mine. I'd like to know, are there any legacy issues? Do you have full permitting to move to production, or what are the constraints? Are there any public consultation and any NGO objections, etc.?
No, Angelos, we went through that part of the process in 2019, 2020. So when we got our EIA approved, you know, that's the major permit that would involve all those consultations, etc. So we have that. There is a construction permit remaining. That would be the last one, and that requires the detailed engineering to be completed and submitted to the government. So we're working on that right now. That would be the last one, and then we'd be able to build basically shovels in the ground.
Okay, thank you.
Loni, you are next. Loni?
Yeah, David, I'm wondering, when you made your pitch, you mentioned that silver will rise and obviously your company will benefit from that. Do you position this company as a leverage to silver play, or how would you perform if silver doesn't necessarily go up or maybe test low 20s in the future?
Yeah, we believe this is a low cost operation, so we're not a call option on higher silver prices. Certainly, in terms of the mine being economic or not, it will be economic, regardless. Just as a metric, that when this mine was in production, the last full year of production was 2015. Their all-in sustaining costs were $16.30, and that's with no mill. And paying toll milling fees, extra trucking costs, etc. So if we put a mill there, our costs are going to be lower than that, at least by a few dollars. And, so that would be where our break-even level lies.
Simon Popple, please.
Could you tell me where your main asset is located, and have you already raised the capital to take it into production? Do you need to raise that capital?
So we're in central Peru. We're about 3 hours drive from the city of Huancayo, which is almost directly east of Lima, up in the mountains, a city of 500,000 people. So that's where we're located. The answer is no. We will do one more financing round for the mine capex. We're funded to do our drill program and everything the company started doing to prepare for that. And then the next step would be the production financing, which is going to be low. We estimate only about 15 million Canadian is required for this 350 ton per day plant. So it's a relatively relatively easy number to get to, but that is still out there. Yes.
Next.
Yeah, for me, it's in terms of resources. Sorry, I just the line was not great for me. But do you have an idea of how many resources you have in Peru at the moment on your under your permit?
So the previous owners calculated a resource of 8.3 million ounces of silver. That's a historical. It's not 43-101 compliant. More details on that in our 43-101 if you want to look into that. But that they did that based on the sampling the underground tunnels that are there. There's 6 kilometers of underground workings in the mine right now, and then projecting that at depth a little bit. So that's what we're starting with. We currently have a drill program ongoing right now, so we will put out our own 43-101 resource estimate in the next few months based on that drilling. But that's sort of what we're working with when we look at starting the mine. That's enough for several years of production, in our view, and then we will aggressively expand that in the coming years.
So last question. Your market cap at the moment is what?
It's about 80 million Canadian.
Okay, so you're basically trading at $10 per ounce. And where do you think you should be trading in terms of based on your current available resource of 8.3 million?
Well, I as a producer, as a near-term producer, I honestly don't think valuing us on resources is actually.
I know, but
has relatively little merit. But look, we'll be expanding that resource base with our drill program that we're doing right now, and getting into production. If you look at the cash flow that we can generate from this mine and give us some kind of reasonable multiple on that, you're looking at hundreds of millions of dollars of market cap. Whether it's 300, 400, 600, 700 like Aya, that's up for debate. But it's multiples of where we are right now.
That's good. Thank you. Very good.
So who else has a question? Yes, Torsten?
Yeah, maybe one to Peru. I like the jurisdiction, but can you tell me your impression if silver hits $50 and higher? What would you think Peruvian government gets a bigger share of silver credits, or just takes your mine away? Any risk here?
Look, with all the massive players, mining players in Peru, I think it's a pretty safe jurisdiction in the longer run, there is quite a lot of political debate there in terms of a business-friendly Congress that's just been elected in April. So, look, I mean, we've seen it in Canada when the oil and gas price went up, 10, 15 years ago, the governments, try and, might take an extra share. But don't forget, silver is not that special in Peru. It's really, they make most of their money with copper in terms of taxes and revenue, government revenues. Copper is way, way bigger. Silver is a footnote in Peru. So I don't think they would target silver. If it would be a greater mining industry thing, maybe. But I don't see silver as being any risk, even if it goes to $50. That's not a big deal.
So not a second Bolivia on your view?
No.
One more question time. We have 20 seconds left. Then I will ask maybe.
Can I just ask quickly?
Yes.
Sorry, Johan. In regard to the current elections in Peru, what is your feeling in terms of the two, runoff participants? Is there a lead? Is Castillo going to lead, or Fujimori? Do you have a feeling on that?
Well, if you look at the last few polls, they're basically at a statistical tie now. So really, I don't take a view on who's going to win. I think Fujimori has momentum right now, but we'll see what happens in the next few weeks. Again, remember, the Congress that was elected in April is pretty business friendly. If you look at the seats of the 130 Congress members, so we're not that worried either way. Obviously, we'd rather not have a left wing guy as the president.
Sorry, David, to interrupt you, but the time is over.
Okay,
I'm very sorry. Sorry to that. Thank you very much. Thanks for the questions. And we come to our next company here. And this is Kevin Bullock, the CEO of Anaconda Mining. Kevin, are you there? Perfect. Please start the slides. So, Kevin, your 3 minutes, please.
Thanks very much, everybody. And I'm happy to be here. And thanks to Mines and Money for putting this on, and you, Jochen, for being the MC here. Anaconda is quite a unique junior company in the sense that it has exploration and significant growth development, but it also has cash flow, which creates us a great opportunity with a strong treasury and a robust balance sheet to continue, with continued cash flow generation in order to carry out our growth programs. Our goal, we're currently doing 15 to 20,000 ounces a year. We've been doing that for 10 years, but our goal within the next 3 to 5 years is to be 150,000 ounce a year producer, and we're well underway in achieving that goal. Next slide, please. So in our operation in Newfoundland, the island of Newfoundland, this is a first-class jurisdiction, Eastern Canada. We have a 1,300 ton a day flotation plant. We have a in-pit tailings facility from the original pit that's fully permitted. I can't tell you the value of that. To build something that can hold 10 years of tailings in a old pit, which doesn't have any dams, is the most environmentally friendly thing you can have. This is the only producing mill on the island for gold, and we leverage off of that with discoveries. And we've had a 2 to 4 year mine life for the last 10 plus years, and we continue to have that. So this is a very valuable asset that we leverage off in our exploration and our production in Newfoundland. Next slide, please. But the real story about our company is the growth potential. We acquired Goldboro, which is in Nova Scotia, another eastern province in Canada, a first-rate jurisdiction. We have achieved our goals over the last couple of years. I started with the company 2 years ago, and we've made this into the single largest deposit in Nova Scotia and the second largest deposit in the Maritimes. We've grown the resource from when we acquired it in 2017 from 850,000 ounces to close to 3 million ounces. This is on the eastern end of a series of deposits owned by Atlantic Gold that was purchased for $700 million by St. Barbara out of Australia a couple of years ago, and we are now bigger than any of those deposits. The right side picture here is a show of the area. It's a very industrial area, very easy to permit. There is a lake that splits what would be one very long pit into 2 pits, but those pits are 2.1 kilometers, and this is the outline of what the surface of the pits would look like once they're exhausted. Very, very large pits with a lot of ounces. Next slide, please. So looking at this, the highlights are that we constrained our Whittle pit shells to measured and indicated only for our 43-101 resource. You are supposed to use inferred. We wanted to be very conservative so it would match our feasibility study, which we're doing right now and will be finished by the end of the year. We end up with 12 million tons of 2.86 grams per ton within constrained open pits, M&I only. This was over 1,000% increase from previous. This is a fantastic grade for an open pit deposit.
Kevin, I'm very sorry, your 3 minutes are over.
Wow.
Yes, that's why I told you it's really fast. Thank you very much for the presentation. And please clear the screen. Thank you. And now our judges, 8 minutes with questions. Who has the first question? Please raise your hand. Yeah, Simon, please.
Kevin, I think you've got Argyle. Is that you're producing Pine Cove, Argyle? You're producing mine.
Yeah. Yes.
Is that going to provide enough cash flow for exploration of Goldboro and is it Sturgtide? I think you've got 2 exploration assets.
We last year we generated $20 million EBITDA from our mines in Newfoundland. This year it should be about 9 from Argyle. We have $14 million in the bank. We just announced a $8.5 million flow-through financing, which will close exactly 1 week from today on the 20th. We'll have $23 million in the bank, cash flow positive, and we are covered for all our development programs going forward to the end of this year. The financing we will need to do is project financing for Goldboro.
Thank you. Loni, Saul, please.
Thank you. Hi, Kevin. Just wondering, obviously, you recently produced some results to the market, which the market didn't like. Can you just briefly touch upon the operational issues that you faced in the recent quarter and whether it would affect the upcoming quarters?
Yeah, certainly. Thanks, Loni. We had a very difficult quarter, the first quarter, because we started a new open pit called Argyle, transitioned from another pit. And when you start pits, you have, you know, the roots and all of the surface issues with roots and other things that go through the mill. We also had a pitman failure on the crusher, which we've since fixed. So we have a rolling ore body as well that is difficult when it becomes flat to mine. However, we've made all the adjustments necessary. The mill is back up and running. We've changed our mine plan. We've reduced the top cut on the resource shell to match what reality is. And the best thing for us is we've milled 100,000 tons so far. So we have a 100,000 ton bulk sample, for lack of a better term, to go with and see what reality will be going forward. We've applied that to the mine plan going forward, and that's why we've changed our guidance from 18 to 19,000 ounces a year to 16 to 17. We're going to be 2,000 ounces short, but we fixed the issues. We have had the same issue every time we start a new pit with the you know, with learning. Most pits have a work-in period or a ramp-up period where you start understanding the deposit and how to mine it. We don't have the benefit of that with these very small deposits that benefit from the infrastructure that we have. So we have to adapt quickly. And we've been able to do that every time we've had a poor quarter, and this will be no different. This quarter will include very intensive waste stripping and will be a break-even quarter. And then for the next 4 quarters, Q3, Q4, Q1, Q2 next year, we'll have very good cash flow.
Okay.
Angelos is next, and afterwards Torsten.
Yes, thank you, Kevin. A question. Point Roost has been producing for years, obviously, and you keep on extending the mine life every year. I suspect this is done with significant development drilling or grade control drilling, whatever you want to call it. How do you allocate your available resources between the operating mine to keep the mine life going and the cash flow generation up, and the Goldboro project that requires significant exploration expenditure?
Yes, thank you for that, Angelos. At the mine site itself, we have a 5-kilometer radius around it where there are multiple targets that we drill. 40 kilometers to the east of that, we've acquired an entire greenstone belt that surrounds the past producing Nugget Pond mine that produced at 10 grams per ton diluted grade. So we try to keep the mine going by finding more smaller deposits around it while we explore the Tilt Cove project, looking for a higher grade opportunity. Remember, we're making money milling 1,300 tons a day at 1.5 grams, and we're looking for 10 gram material at at Tilt Cove. Should we find that, and we have a lot of opportunity of similarities to the Nugget Pond deposit, you can imagine going from 20,000 ounces a year to 80 without changing the mill or the permits or anything, and it's truckable distance on highways. So we have about $3 million for exploration around the mine site, $3 million at Tilt Cove, and we have a $5 million program of exploration at Goldboro, whereby if you follow the trend of the mineralization in Nova Scotia to the west for 1.5 kilometers west of our existing 3 million ounce pits, we hit another past producer called Dolliver Mountain, and we think we can fit another pit in there with exploration. So we'll be doing that shortly, geophysics and exploration. So we have a lot of news coming up, a PEA coming out in a month, which will show the value of Goldboro, which I guarantee you will be 90% of the company value is moving towards Nova Scotia away from Newfoundland, and that the value of Goldboro will be significantly multiples higher than our current market cap.
Thank you. Torsten?
Yeah, I also understood that Goldboro will be exciting news in second quarter and fourth quarter with the PEA and the feasibility. Pressing my thumbs on that. Lots of others asking me as well on your after your transition phase now on the current production. Can you give a bit outlook, a little bit color on the production, not only in production profile but on the cost side? What do you expect the costs of production per ounce is developing into the next 2 or 3 quarters?
Well, as I said, we'll have a PEA out in a month, that'll say all those actual numbers. I don't know them yet, but what we're tracking towards is a little bit over 100,000 ounces a year for at least 15 years, transitioning from an open pit to underground in about year 11. We have 10 years of open pit mining at over 100,000 ounces a year, very high grade. It'll be the highest grade open pit in Eastern Canada. And our costs, it will have a relatively high stripping ratio, about 7:1. And that means that our costs will be, our all-in costs will definitely be a very good number, less than $900 per ounce. And our operating cost should be a very reasonable number in the $600 to $700 area. However, that's just thumb sucking for me right now. The real numbers will come out in a month, but that's what we're tracking toward. This will be a very robust project. The value of it will be multiples higher than our current market cap.
Vincenzo, was there a hand raise?
Yes, thank you. No, very interesting. I want to understand a little bit more about your tailings project, and when do you think? Can you give us more details on it?
Sorry, which tailings project?
The one next to Pine Cove Mill.
No, that's not a project that we've been able to. Yeah, this will be the final question, as I have 30 seconds left. The tailings facility is actually the original open pit that we mined for 10 years. We managed to actually convert that into a fully permitted tailings facility. So as we find more gold and mill it, we have this facility to put in. And if we find something new and we have years of production left, the tailings is already built. To build something that could hold 10 years capacity with solid walls would cost you $50 million.
That's what I was asking. Yeah.
And take you 5 years to permit.
Yeah, no, that's exactly what I was asking for.
Yeah, so there is opportunity for consolidation in the area too, because there are other mines. So it's a really valuable asset as the only producing mill with long-term tailings facility in Newfoundland.
I agree with that. Thank you.
Thank you very much. That was exactly in time. Thanks to the judges. And Torsten, can you make sure you order next time the hot pizza without sirene? That would be great.
I was hungry. It needs to become fast. I'm sorry for that.
Okay, super. Thank you very much, Kevin. Thanks to the judges again. And we move on with Cole Evans, the CEO of Enduro Metals.
Okay, thank you.
Good.
Perfect. Okay, we'll start with this one. So thanks again, everybody. My name is Cole Evans. I'm a geologist. I'm also the CEO of Enduro Metals. We're a junior explorer focused on our 638 square kilometer Newmont Lake project in the center of British Columbia's Golden Triangle. For those who don't know where the Golden Triangle is, this is northwestern British Columbia, Canada, one of the most prolific mineral districts in the world. Go next slide, please. We might be a little out of order here. Perfect. There we go. Okay, we're a little more zoomed out. So just to give you guys a bit of a regional scale within this Golden Triangle, it's drawn different depending on every company. Fortunately, like I said, we're right in the center of it, so you don't need to change it. There's over 220 million ounces of gold within this area, and everyone's going to tell you their project is underexplored. We found a quantitative way to show it. Our equal area, as we call it, represents far less than 1% of the total work that's been completed in the Golden Triangle. And it goes back to a simple principle. You're never going to find anything unless you actually go looking for it. So we started this process a couple of years ago. It's gone through some transitions. I'm the largest shareholder of the company. I've personally invested about $2.5 million cash into it myself, as well as our second largest shareholder, Rob McEwen, founder of Gold Corp, who is matched similar to around those numbers. If I can get you to hop back to the previous slide, that would be. Oh, okay, gotcha. Okay, perfect. Yeah. So the first question I get, well, why is it unexplored? Well, we're truly, this is the frontier of the Golden Triangle, so to speak. We're right on the edge of the ice sheet that's been receding kilometers in the last 10 years, but it's a factor of that. It's a factor of that. And one of the biggest things is there's been nearly 3 billion, this is in Canadian dollars, about 3 billion Canadian dollars in infrastructure investment into this area over the last 10 years. Hydroelectric projects, road access, all these things. We've got about 30 seconds left. Okay, perfect. Which has really opened up this area. What are we focused on? This is elephant country, copper, gold, porphyries, alkalic porphyry systems, arguably the most sought after mineral deposit type in the world. About 30 minutes ago, we just had all of our drill results come across the wire from our 2020 season. every single hole we drilled hit gold mineralization of varying styles and degrees. Most significantly, though, we've hit the very first porphyry mineralization along the McClymont fault that's ever been drilled before. We're going into 2021. We're fully funded for what we need to do. It's going to start here in about 3 or 4 weeks, hopefully snow dependent. And we're looking for this to be the breakout year for Enduro metals. Am I within my 3 minutes?
That was perfect, Cole. Thank you very much. Yeah, thanks for stopping the screen share. Loni, you were the first to raise the hand. Loni, Saul, please. You just have to unmute yourself, please. Loni, we cannot hear you. Yeah.
Hello, thank you. Hi, Cole. Just wondering, obviously, the pitch was mostly dominated with the area discussion, but you didn't discuss much about your own project. What do we know so far in terms of what you hold? I mean, do you have any data that supports that there's something interesting there?
Absolutely. Yeah, my apologies. We've got so much, unfortunately, that it's hard to squeeze it into 3 minutes. But yeah, there's like I said, we've put out some incredible results already over the last year. One of the highlights ones from an epithermal vein discovery made was 8.85 meters with 32.5 grams per ton gold, with just over % copper in that as well. There's a historic mineral estimate from the 1980s. That's really the only the majority of drilling that was done there. Previously was between 1987 and 1990. They had some really good results. I think when their best one was 11.2 meters of 55 grams gold. Of course, that was done right at the exact same time as the SK Creek discovery, which is our neighbor just to the southeast, and Galore Creek is right to our northwest. It's stiff competition when you're competing with what still to this day was the highest grade gold intercept ever drilled in human history. So we look at it as more or less was overlooked. But yeah, unfortunately we have so many numbers, I couldn't cover them all with you. One of the highlights for 2021 we're going to be drilling for the first time was a trench 37 meters, 1.3% copper, 1.5 grams gold, 23 grams silver, and about 3% zinc on surface. Has never been touched in human history. It was covered in ice for the last 20,000 years until about 10 years ago.
But when do you think you can announce a resource? Like how much drilling you need to do to come to a resource definition?
Good question. So our original strategy was over the next 12, basically by the end of the season, over the next 12 months. Now, though, that we're making a transition focused into these porphyry systems, these are obviously a very large scale mineral deposits. So that throws off that timeline. We could focus on the near surface high grade. And like I said, there's a historic resource estimate from the 1980s, about 250,000 ounces of gold at just over 5 grams average grade. It's all within 80 meters of surface. But that was at a 2 gram per ton cutoff, calculated on gold at $475 an ounce. So we look at it as essentially irrelevant today. We could definitely build on that significantly in the next 12 months, but our focus is going to be on the big, what makes the Golden Triangle the Golden Triangle, the elephant discovery. That'll put that resource estimate at a further out timeline than 12 months.
Thank you. Then Torsten, and afterwards Simon. Torsten,
yeah,
please.
thank you. Thank you for the overview on the results, Cole. Very helpful. I love Golden Triangle area on that. Can you, topping on that, describe how actually you and your team is able to add value for investors, for shareholders with this project that nobody else can? What is your USP on that?
Yeah, absolutely. I think the biggest thing is where it comes into the technical abilities and execution. So a little more background on myself, how I got started on the business side of this. Like I said, I'm a geologist. Started an exploration services company a number of years ago. We've been fortunate to build it into one of the largest service providers of its type in Western Canada. And we specialize in this area. The Golden Triangle, make no mistake, this is not Kansas. It's not an easy place to work. So you really gotta be dialed in, know what you're doing. And fortunately, we've had a experience, I think, in over 3,000 square kilometers, all through northwestern BC, learning how to dial that in and knowing what's significant and what's not. And the second side of that is bringing a 21st century approach. We're big into technology, but I won't get into, again, for the sake of time, all the details of the technology, but I'd be happy to discuss it after. But it's also important pairing 21st century, ways and technology with you simply can't beat getting boots on the ground, walking, seeing, and touching things. So it needs to be a combination of both.
Thank you. Simon?
I'm reasonably familiar with the Golden Triangle. There's some amazing projects there. I think Seabridge is the largest undeveloped gold asset in the world, and Tudor Gold came out last year with a resource of about 19 million ounces. Appreciate you've had about 3 billion of infrastructure, but infrastructure does seem to be a major factor in the region, given how mountainous it is. What kind of sets you aside from the competition in terms of your ability to actually bring a mine into production?
I'm glad you asked that. Great question. So with the advantages of that 3 billion infrastructure improvements now, like I said, what you wouldn't have seen before and you don't see in those other projects, we have road access touching our property both to the north and the south. There's in fact actually a hydroelectric power plant intake on our project on the southern end, part of a 303 megawatt power project that just got up into full production over the last few years. Also, it goes into topography. The way I break in the Golden Triangle, every valley is different. You know, I don't want to talk down on any other projects, but their topography is a significant hindrance relative to ours, where we have you know, U-shaped glacial cut valleys. We're actually changing up our logistics this year, where we'll be able to boat into our camp with landing craft, inboard jet drive landing craft. So it gives us a significant advantage with access, which of course drives our costs down to where our goal is this year to be the lowest cost per meter greenfields explorer in the Golden Triangle.
Thank you.
Thank you. Angelos?
Yes, thank you, Cole. Very interesting location to be hunting for gold. Obviously, very prospective elephant country. I'm interested that you mentioned the cost side. What does your treasury look like now? How much cash do you have? And what is your budget for the next 6 to 12 months to achieve your objectives?
Yeah, so for the exploration season this year, we're going to spend roughly 4 million in exploration. Like I said, that'll start about next month. Currently, our treasury is about 3.8 million in the bank, but we have about 1.5 to 1.7 million in Emcee tax credits from the BC government that we'll be receiving back. So that is I give you a range because of course it's the CRA. They're going to try and squeeze something out of you, but that's for 2019 and 2020. So that'll top us off to what we need from a corporate burn rate perspective. We're very lean running, so that'll have us fully funded for what we need to get done in 2021.
Yeah, and if I may, another leading question relating to that. You mentioned yourself and Rob McKeon as big shareholders in the company. What is the rest of the shareholder register to enable you to raise financing for your operations?
Yeah, good question. So like I said, myself, I'd be the largest. Rob McKeon would be the second largest. Our third largest is Romeo's Gold Resources, who we have a 100% option on about 60% of the project. The other 40% we already own 100% outright. So we'll be exercising that. So we'll have 100% of all this by, I think the deadline is February 2022. So they're the third largest shareholder of the company. And then from the investment side, like you said, the access to cash to move it forward as we go. And unfortunately, I can't, we don't have other names in the public forum that in just for privacy's sake, I have to respect that. But one of the biggest things, we raised 11.2 million back in August of 2020. And what was really important for me was bringing in mining people when I became the CEO and we had this transition with this company. And you know, I can half of that 11 million finance. I can count those people with one hand, so to speak. So we focused on the high net worth individuals again who know mining and see the potential.
Thank you.
Thank you very much. Those were exactly the 8 minutes. Fantastic. Thanks to the questions. Thanks to your presentation. And now, last but not least, we have Canagold Resources with Scott Eldridge, the CEO. And Scott, when you are ready, please.
Okay, so thank you, Johan, and thank you, Andrew, for organizing this event. Definitely some exciting companies here. So my name is Scott Eldridge, and I'm the CEO of Canagold Resources. And we are 100% focused in Canada on gold projects that fall under the category of exploration and development. So with any opportunity to invest in a junior mining company, as an investor myself, we look at 3 basic pillars: the people, capital or cash, and then the projects. So in terms of people, I've been in the business for about 15 years, mostly on the money raising side, and I've raised about $500 million in my career. Our COO is a mine builder. He's built and operated 4 high-grade underground gold mines in his career. And our VP Exploration has experience in mesothermal vein systems as well as coming out of Rio Tinto. In terms of capital, we have about $8 million in the bank, and we're fully financed for a 24,000 meter drill program where the budget is about $6 million. And that program is actually going to start in about 2 weeks from now. And we'll dive into the project. Next slide, please. Okay, so we've all heard the phrase, a picture tells 1,000 words. This image absolutely resonates with that phrase. So in the center of the picture there, the red blob is the resource of our New Polaris project. So the project is located in northwestern British Columbia, and we're just north of the Golden Triangle. And the slide here compares other mesothermal gold camps in Canada. And the commonality you can see between all of these projects is the depth. So what differentiates our project in terms of the potential blue sky potential is that our resource only goes to a depth of 600 meters, where many of these mines in Canada can go to a depth of 2,000 meters. Next slide, please. We do have a resource on the project. Half the tonnage and half the ounces are in indicated. The other half is in inferred. And if you can see the screen there, the 10.8 gram per ton indicated and the 10.2 gram per ton inferred, these represent what would be the head grade to the mill. There's already a 20% mining dilution rate factored into these numbers. The project does have a PEA on it, and we're about to kick off a 24,000 meter drill program that would then advance us into a feasibility study. Next slide, please. This gives you a more zoomed in image of the ore body. The green is the surface, the yellow is the C1 West main vein. That represents the bulk of the resources. It only goes to a depth of 600 meters, and it is open at depth. We're fully permitted for 24,000 meters, which is spread across 47 holes. Again, that's going to start in about 2 weeks, and we will be testing the project at depth, looking at the down dip potential extension of the ore body, and we're looking to drill some 800 to 900 meter holes to demonstrate that to the market. To give you an idea of previous results.
Thank you very much, Scott. I gave you already some extra seconds because of the technical issue, but I have to be fair with everybody. Thank you very much for the presentation. And now 8 minutes with our judges. Loni, I think you're fastest. Loni?
Hello, Scott.
Hi.
Yes, hello, Scott. Thank you. Just wondering, is your resource, looking at your resource shape, is it narrowing as you go down? Is there any structural constraint for it to narrow basically as you go deeper?
Right. So we haven't drilled it that deep, as you know, compared to other mesothermal systems. So based on the information we have today, we don't see that it pinches off at depth. There's very healthy mining widths here that are anywhere between 2 and 15 meters, with the average being 3. And we don't see that 3 meter average mining width narrowing at the 500 or 600 meter level. So we're pretty optimistic that, you know, these types of mining widths and lengths would continue at depth, but obviously we have to prove that with further drilling.
Angelos?
Yes, thank you, Scott. I just want to mention, I was looking at your indicated and inferred resources with the cutoff grades. At what price of gold have you calculated that cutoff grade? And also, what has been the spacing of drilling so far to reach those indicated and inferred?
Right, well, I'll start off with the drill spacing. So again, half the tonnage and ounces are inferred, the other half is indicated. We will be infill drilling the inferred to move it up to measured or indicated to then become proven and probable reserves when we conduct a feasibility study. The drill spacing on the current inferred is about 40 meters, and the drill spacing on the indicated is about 22 meters. And we've run a PEA on the project. The numbers are very, very robust, driven by the grade. And the NPV economics were run at a $1,500 gold price. And then the actual resource was run at a slightly lower gold price of 1,400.
Thank you.
Then Torsten, I think you raised the hand. Did I see that correct? No, sorry. Then Loni, please, again. Simon.
Yeah, can you, Scott, can you mention the IRR and the net present value of the PEA? And from since then, has the resource been improved?
Right, so the PEA is from May 2020, so it is fairly recent. So again, it was run at $1,500 gold. I always like to look at the after-tax IRR numbers. I hate it when companies publish pre-tax numbers. So our after-tax IRR at $1,500 gold is 56%. So it's very robust. And then our NPV with an 8% discount would be about 340 million Canadian, almost $500 million US. And I'll also mention the after-tax payback. It's well under 2 years at $1,500 gold. And that's based on an 8-year mine life where we would produce about 80,000 ounces a year.
And how much cash do you have currently?
Currently, we have $8 million. And as I mentioned, for the upcoming drill program, where you will see a news release on Tuesday that it is commencing, we'll be drilling 24,000 meters, and the budget for that is $6 million. And that program will last about 6 months.
Good. I think, Simon, you raised a hand in between. Did I see that correct?
Yeah, sorry. The grade on the chart that you showed was about 10 grams a ton. Obviously, you haven't gone down at depth. How does that compare with the kind of competition at the sort of depth that you're talking about? That seems quite high grade to me.
Right. Well, mesothermal gold vein systems or orogenic deposits, whatever terms you want to use, they'll typically be between 8 and 15 grams. The 15-gram deposits generally have been mined out, with few exceptions, such as Fosterville, which is also a mesothermal system. So our grade would be sort of right in the middle there of current mesothermal gold mines around the world. And if you were to rank our grade, not just mesothermal systems, but any high-grade underground gold mine around the world, if we were a mine today, this would be the 11th highest grade gold mine in the world.
Thank you.
Vincenzo, prego.
Yeah, sorry, my question was partially answered. I wanted to ask, out of the $8 million cash, how much you're going to spend in drilling? And you said 6. Can you tell us how long the drilling program is going to last, and what's your plan for following this cash burn?
Right. So the drill program itself will start in about 2 weeks, and then we'll have about a 6-week lag in terms of when we start to get assay results back. But the actual drilling will take 6 months. And then our intention after the drill program is done is to then move into a feasibility study. And yes, we would have to raise money for that, but I would also suggest that we will have 47 holes to come out to the market, which will most likely be all high grade, which would probably create significant value in our company, and we would look to raise money hopefully at a higher share price.
Then Torsten, please.
Thanks. In your presentation, Scott, you're pointing out you're looking actively for also new acquisitions, making it a combination that your valuation currently is very interesting, means very cheap from that point. What is your, 2 questions on that. What is your worry in terms of looking for acquisitions being trading at this multiples? And would you look beyond gold? Would you also look into the silver side?
Right, good question. So in terms of valuation right now, there's a number of ways to value a pre-production company. We do have a resource, we are high grade, we do have a PA. So if you look at enterprise value per resource ounce in the ground, we trade at about $22 US. And our peers, peers being companies that have projects in either Canada or the US with some kind of a study on them, such as a PA. Our peer group is about double that. So we feel that we're undervalued compared to our peers. That's needless to say. And one way to potentially overcome that is to acquire new projects to potentially revalue the company or create some economies of scale in projects. So we're looking for ounces in the ground projects that have low valuations, such as we do.
Then Loni, please, and afterwards Vincenzo.
Yes, Scott, just a quick clarification. I think you mentioned the NPV in the PA being 340 million Canadian and $500 million US. It should be the reverse, right? Because some people in the audience got confused with that. Can you clarify that, please?
So yeah, I made a mistake there. So you're right. So in Canadian dollars, the NPV is about 470 million, and then in US, it would be about 330 million. Yeah.
Thank you.
Vincenzo?
No, that was my previous question. I'm okay.
Ah, okay. Sorry. So, who else? We're anyway running out of time here. That's okay. Super. Thank you very much. Just on the spot with 8 minutes. Okie dokie. So now we come to the question of the question. To whom do you want to give your $1 million? And I would like to start. First of all, thanks to all our presenting companies. Well done. Very convincing. We should invest in all of them maybe. But I want to start with Vincenzo Zinni to tell me whom do you want to give your money?
It was between the two. I think between Anaconda and Canagold. I think there's probably more upside on Canagold for me.
Okay, so Canagold you give 500 and Anaconda, correct?
No, I was deciding between the two, and I decided at Canagold.
Okay, so 1 million Canagold. Good, super.
I didn't realize we can split.
Yeah, well, I said it in the beginning, but you can share 500,000 if you like, but it's no problem. You Canagold gets the $1 million. That's fine. Then we have the next one is Angelos Damaskos. To whom do you want to give your money?
Yes, thank you. They are all very compelling presentations, all very well-positioned companies with obvious prospectivity. They are not entirely comparable, given that Anaconda has production and cash flow. The others are mostly exploration or development, late-stage development. But given that we are particularly bullish on silver at the moment, I would prefer to back Kuya Silver with my $1 million.
Super, thank you very much. Then Loni, Saul, to whom you want to give your $1 million?
Johan, I want to split it actually into two. So I want to give half of it to Anaconda and the other half to Canagold.
Okay.
Yeah, copy me.
Well, that was my initial idea.
Don't make it too complicated, please. Okay, 500 and 500. Okay, good. Perfect. Then Simon Popple, to whom do you give your $1 million, please?
For me, it's Anaconda.
Oh, Anaconda. Okay. 1 million. Good. And I give you $1 million. You are the deciding factor. Torsten?
Ah, sorry, the sound was not working.
Yeah.
Yeah, as a portfolio manager, I would also normally split investment to reduce risk. But with the outlook of a 10-bagger, you got me, David, on this. Yeah, so I'd entrust you $1 million because I expect that the stock is trading at $20 from the headline. Seriously, from two other things, I also like the silver exposure. I think silver is continuing its outperformance. I like the outlook on the two mines and near production on that. Yeah, and the jurisdiction, the combination of Canada. Tight on that. So therefore, $1 million to you.
Okay, super. So if I'm then correct, we have 1.5 million at Kuya, 1.5 million at Anaconda, but at Canagold Resources, if my calculation is correct here. And so for that case, Canagold with Scott Eldridge won this pitch battle.
Sorry, Jochen, sorry to intervene. I'm just going to check here. I was keeping score. If I've heard it correctly, if Torsten said it was 1 million to Kuya Silver, isn't it 2 for Kuya Silver and 1.5 votes each for Anaconda and Canagold? So
no, because Loni split then also with Angelos each the 500. This is why I
No. I didn't split my I said all on Kuya Silver.
Oh,
I see here some balance sheet manipulation going on.
Yeah,
we are like, we should compare a bit later.
We are like the ECB, no problem. Okay, then I have 2 million at Kuya, 1.5 million Anaconda, but also 2 million for Canagold, correct?
Okay. I might have this wrong because I only have a B grade for my O-level maths. So I have 2 million for Kuya Silver, 1.5 for Anaconda, and 1.5 for Canagold.
You are correct.
And that makes it 5 million in total.
Yes, I did not cancel this 500 down there. Okay,
Yeah.
super. Then we have the winner is sorry for you, Scott. David Stein from KUYAF Silver. You will be then in the final. But really great presentations. Thank you very much to all of you and also to our judges for very good questions and taking the time here. And I hope all the participants got some very good investment ideas. I'm already invested in 2 of the companies, so I'm fine on that. I'm well covered. And yeah, I wish you all the best. Thank you very much. And I will now continue with my holiday and get myself a gin and tonic because now it's 4 o'clock here. I'm absolutely allowed to. And I wish you all good health. Please stay healthy. That's really important. And I hope latest to see you all again in good shape at hopefully then earliest or latest how we say that at PDAC in Toronto. But I don't know, Andrew, if Minds and Money in November will already happen in London.
Yeah, I mean, I think that certainly just talking to everyone who's still here. I mean, first of all, Jochen, thank you for doing a great job for being the MC. Thank you to all of the pitch battle contestants. Thank you to the audience, and thank you to the investors. As I'm talking to you today, we're seeing increasing interest and demand from the people we're talking to from Minds and Money London, the 30th of November to the 2nd of December to be physical. So that's looking increasingly likely. So we're obviously we're reaching out and having conversations with people at the moment, but watch this space. So hopefully the next time we meet, Jochen, it won't be across the video screen. It will actually be having a real life gin and tonic together.
I would love to, absolutely. And you know, gin and tonic is the best against Corona. That's also for sure. So thank you very much to everybody. And yeah, wish you all the best and take care and hope to see you all soon. Thanks and bye-bye from Austria today.
Thank you very much.
Thank you.
Thank you. Bye-bye.